Hi friends, whenever a stock falls down by 50% or 70% or 80%, the three possible reasons could be number one, valuations, number two is fundamentals, and number three, sentiments. And more importantly, if we understand the precise reason of why a stock is falling down, then we will be able to make better investing decisions in terms of should we take a fresh entry into a stock or should we exit a stock because it might be a falling knife. In this video, I am going to speak about three stocks, giving you practical examples of the approach that you might need to take when a stock is falling down. People who are new to my channel, my name is Rahul Jain. I'm a full-time investor and a full-time content creator. You can also consider subscribing to my YouTube member community where I post in-depth analysis of stocks, mutual funds, ETFs and various other assets on a daily basis. With that, let's get this video cracking. The first stock I'm going to discuss is Tanla platform. Have a look at my screen and you will see that back in July 2020, the stock used to trade at around 78 rupees level. From that level, it went up almost by 2500% and went up to 2000 rupees level by the end of 2021. At that time, every chaiwala, every other person in the lift was speaking about Tanla platform. But what happened in 2022 is what I will discuss in this video as well, because the stock came down crashing from 2000 levels to almost 500 rupees level, right? Now in 2023 and 2024, the stock has started to show some recovery and has gone to 860 rupees level. Now let me quickly break it down for you in very simple language. First is this huge rally that you see. This was mainly because after COVID, everybody realized that the world is going to move into the digital business communication, and this company operates into digital communication. I'll speak about that in a minute, and that's where the stock really picked up. And also, if you look at the P&L account of this company, you will see that in 2020, 2021, 2022, the top line grew very nicely and the profits were also growing at that time. And because of this tailwind that people were seeing that the digital communication is going to be key in the future, people were buying this particular stock. And after hitting this all-time high 2000 levels, the Tanla platform started to drop massively in 2022. And one of the key trigger for the stock to start falling down was mainly because of their operating profits. Have a look at my screen and you will see that fiscal year 2023, which is the most part of calendar year 2022, the operating profit of the company was down 590 crores and their net profits were also down. And if you see my screen, you will note that there is a detailed commentary about why their EBITDA profit was down, mainly because of the currency exchange movement that was happening, mainly because they lost one of their customers to a massive scale level. That's why there was issues in the profitability. They had to put in some cost in one of their platforms called Carix platform, and hence there was a pressure on the profitability. But to be honest, EBITDA drop of 4.5% is not a huge deal. But please understand, when a stock is trading all-time high in the levels of 2000 rupees from 78 rupees, they only need a smaller trigger, very small minor trigger for stock to come down. And that's what precisely happened in the case of Tanla platform as far as my analysis goes. Okay, Rahul, we understand why the stock crashed like anything in 2022. What is the future outlook? Why don't we speak about future outlook? So have a look at the valuations now. First point, 21 PE versus 39 PE of industry. So that is very good. The stock is not highly overvalued. I think it used to trade at around 60-70 PE level. PB, if you look at 6.03 versus industry PE of 3.81. From a peer's perspective, it is still very low, but from an industry perspective, it is on the higher side. If you look at the PEG ratio, it is looking very low, which is very good point. Stock is down by almost 22% in the last 1 year itself, although it made highs of 860, and in just last 12 months the stock is still down by around 22%. So point number one is that valuations right now to me are looking attractive. They are not highly overvalued. Secondly, if you look at the shareholding pattern of this company, you will very quickly note that the promoter stake has been constant, which is such a good news that the promoters did not sell off when the stock was going at around 2000 level. If you look at the FI stake, has been stable. DIs, it was never a DI stock, to be honest. That's what we can see here very clearly. Public holding is very high, 40%, so that could be considered as a red flag right now. But point number three is, if you look at company's cash reserves, 757 crores, so it's a cash rich company, and companies like this need a lot of cash to build new capabilities into their platform. So this is a very good point when it comes to the future growth of this company. Speaking about future growth of this company, the long-term prospect of this company in my view is very bright. Why? Allow me 1 to 2 minutes of commentary. This company has built a lot of platform, for example Wisely platform, that are used for communication purposes. So for example, banks will use this platform to communicate with their customers by sending the OTP, which is using the SMS technology. So right now their majority of the revenues are coming from channels like SMS. But where is the world moving right now? The world is moving from SMS or traditional methods of communications to OTT related channels. Let me show you some real data. Uday Kumar Reddy, their CEO, has clearly said that they are feeling pressure because users are shifting to OTT channels right now. And this company is also slowly pivoting into OTT channels or adding OTT channels into their portfolio. For example, they added WhatsApp last year, and that used to do 50 crores a quarter sort of a business. It has now grown to 150 crores a quarter business. So a lot of growth is coming from OTT channels, and this company is now pivoting. For example, Google's RCS, a technology that again I am not talking about in this video, otherwise the video is going to go really long. But the point here is that you need to understand Tenla platform is also adding OTT channels into their communication messaging right now. And that brings me to my final point on the future growth prospect of this company, the conversational commerce. In the next 5 to 8 years, what is likely to happen is the world is going to move to conversational commerce. For example, you will have your WhatsApp as an app and you're going to shop through WhatsApp rather than going to Amazon. And this conversational commerce is projected to be around $150 to $175 million of a market in India, which in my view is a significant market, but it really depends on how much of that business this company can really grab. Now, in terms of the revenue and profitability guidance, the company do not give any guidance, but what the analysts are estimating right now is that if you look at the revenue growth forecast, by majority of the estimates, it comes out to be around 13.72% for the next year. If you look at the earning growth forecast, it is likely to be around 14.25% for the next year. Again, these are some estimates. If you look at the price appreciation, potentially the stock might go up by around 40% in the next 1 year. This is what the analysts are saying. Analysts could be totally wrong. This is just a guesstimate is what I would say, but overall I think there is a good long-term prospect for this company, and also the valuations are not very high at this point in time. So that's where this stock right now stands. Not a stock recommendation for you. I've given you a lot of insights and analysis in terms of what's going on with this particular stock, and if you like that, hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with such content for you at zero cost. With that, let's move to stock number 2. Stock number 2 is Bandhan Bank. Have a look at my screen and you will see that the stock used to trade at around 750 level back in 2018, and from that level the stock is down by almost 75%, right now trading at around 187 rupees at the time of recording this video. Now 5 months back I did a detailed post on Bandhan Bank on my YouTube member community, giving the entire picture of this stock, what has actually happened, what is the real cause of the issue in Bandhan Bank. And if you want to get these insightful analysis on daily basis, then you can consider subscribing to my YouTube member community, because I speak about stocks, mutual funds, ETF and various other assets in a very simple and meaningful way. Feedback has been excellent. Go to my channel, press on the join button and be my guest. But coming back to Bandhan Bank now, if you see this chart, you will note that the main crash we see is from October 19 to March 2020. This is called the COVID crash, and during COVID what happened was that their profit declined by almost 29%, mainly because they had to create more provisions. Please understand, Bandhan Bank's main portfolio is Emerging Entrepreneur Business Fund, EEB fund, and a lot of bad debt comes from that particular segment, and hence during the COVID when everything was shut down, the company was struggling hard to collect their loans back, and that's where their profitability was rock bottom and the stock was crashing like anything. The second big problem traditionally with Bandhan Bank has been their gross NPAs, the bad debt that I just spoke about. Have a look at my screen, you will see that the bad debt, the gross NPA has been around 8%, 6%, 10%, 7%, and only up until December 2023 this gross NPA was 7%. What happened in March 2024, something historical, is what Bandhan Bank did. They actually wrote off a lot of their bad debt. That's why if you see the profitability, the net profit you see is only 55 crores, because the bad debt they wrote off during that particular quarter had a massive hit in their profitability. Now if any investors looks at their gross NPA, they will say the gross NPA is only 3.84%. Net NPA is also looking very good, 1.11%, so there shouldn't be any problem. But this history is what you need to understand, that they wrote off a lot of bad debts, hitting their profitability to a great extent. So what is the outlook, Rahul, here? Can this stock rally from here on, or will it remain under pressure? So let me give you positives and negatives. See, first point you need to understand is that Bandhan Bank's portfolio of 20,000 crore, they had taken an insurance, right? And they are now claiming some of the bad debts out of that insurance. Now this insurance is not an easy way to get the money. They already got 950 crores of claim, but now they've applied for the second claim, which is 1296 crores. Now whether they will get this money or not, it really depends on an ongoing audit. Now NCGTC is trying to establish whether these loans that the Bandhan Bank gave, were these given to fictitious accounts or not. Now it really depends on this audit's outcome. If the audit outcome is positive and Bandhan Bank gets this money back, then great. in my view, stock is likely to see positive movement. But if the audit results are negative, then it might create a lot of pressure on this particular stock. Now, we don't know what is going to happen. We have to wait and watch. Point number 2, very recently, ICRA has downgraded Bandhan Bank. So this is a very, very negative news for Bandhan Bank, and it's a short-term pressure only. Point number 3 is that in the last 2 to 3 weeks, their CTO and their one more senior manager, chief audit executive, has left the company. These are 2 senior positions. That's never a good sign in my view. But if I look at their latest quarterly results, the bank from a numbers perspective has done pretty well. Their profits are up by almost 47%. Their loan book is up by 21%. So all in all, the bank's numbers are looking very, very good. It is one of those examples where a student who will score very, very high marks and hardly study is sort of an example that I can place here. Now, coming back to final verdict on Bandhan Bank, from my perspective, the stock had made a bottom of 170. I don't think there is a lot of damage that can happen to Bandhan Bank because it has already happened. And if they get some positive news from likes of the audit, etc., the stock is likely to go up in my view. But again, do not take that as a stock recommendation. I've given you positives and negatives. Anything can happen. You might lose money. So please make sure you do some research before you taking any positions in Bandhan Bank. With that, let's get to stock number 3. Let's move to stock number 3, which is Titagarh Rail Systems. Some of you dropped comments on my channel saying that, Rahul, can you speak about Titagarh Rail Systems? So have a look at my screen. You will see that the stock used to trade at around 210 level back in March 2023, and from that level it has gone to 1900 rupees of level, giving 800% of rally. And this context is very, very important in the context that the stock is now correcting from 1900 level to almost 1080 level at the time of recording this video. 45% it has come down. So a lot of damage has already happened now since the stock has come down by around 45%. But this context, you need to remember that the stock is still up by 370%. So if we draw it from 210 level, it is still up by 370% almost in last 18 months of time. Still a lot of profit some of the investors might be sitting. 370% is a huge profit. Now, people who got this stock at a very high level, 1900, 1800, 1700, 1600 level, the only thing I can say is don't shoot yourself because it happens. For example, BlackRock Global Funds also got this stock back in June at 1680 levels. These are the seasoned investors and everybody does make mistakes. So please don't take this personally. Don't shoot yourself if you got this stock at a very high level, right? Now, what are the outlooks of this company? Let me give you quick 2 to 3 minutes of commentary. First point, and the most critical point you need to know, is very recently the company announced that they had to short close their order for 3089 wagons, which in my view, they are giving a reason that they could not deliver these wagons to Indian Railways and therefore they had to short close the contract. What is this indicating? This really indicates that there could be potentially capacity constraint at Titagarh Rail System. Please understand that these companies cannot increase their capacity by unlimited amount, right? When they are producing wagons, the order book is very, very good. The order book is intact. But when it comes to supplying these order books or fulfilling these order books, this is where, in my view, Titagarh has hit a ceiling right now. They can't really continuously go and get more orders and continue to supply the products. There has to be a limit, and this potentially has hit their limit right now, as you can see in this particular communication. Second point, if I look at the valuation, still the stock is trading at a PE of 50 versus industry PE of 45. In my view, it is still highly overvalued. 50 PE is not an easy PE for a company that may not see more than 15 to 20% of growth. PB ratio is 6.64 versus industry PB of 5.63, and the PEG ratio is very good, 0.60. But all in all, right now from a valuations perspective, it still looks very high to me, right? If I talk about third point, which is the sentimental fear, right now what's happening is the sector churning is going on. Sentimentally right now, this is a weaker sector. Railway sector is a weaker sector right now. Right now, the money has been moving out of sectors like defense, railway, power into sectors like IT, pharma, etc. So there is sentimental fear right now in these sectors because stocks in these sectors have seen massive rallies in the last 12 to 18 months and the valuations have been crazy. So sentimentally right now, it's a very, very weak play in my view. Now, if you're so keen to buy this stock because you have some high conviction, again, you can go ahead and do what you want to do. I'm not going to give you any recommendation. The only suggestion I would have is if you ever wanted to take fresh entry in stocks like this, please do not go and buy in one bulk amount. Please make sure you stagger your purchase because it's always good to stagger your purchases. The stock might go down to 800 level. It has made a bottom in previous at 800 level, right? So bulk buying is never recommended in any stocks which are highly overvalued. I can see it's highly overvalued. So you might need to accumulate if at all you want to take any positions in this stock. So in this video, I have covered 3 stocks giving you a lot of insights. If you like that, hit the like button. Let me know in the comments a simple thank you. With that, I will see you in my next video. Until then, keep rocking.